Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just gone 25 past 12 on Saturday the 6th of February 2021 and we're going to spend the next few minutes talking about Bitcoin. Now I warn you, I'm giving you a preemptive waffle warning. This video is going to go over my usual 15 minutes because all this stuff up here, this wave 4 correction we've been in, when we come to the Elliot wave section of the video, this is going to be me talking a lot about a lot for a while at least. So if you're not up for that, you can always just ignore it once we come to the Elliot wave point and just listen to the basic technical analysis at the start. But I'm telling you now, I feel that the value of this video is going to be in understanding what's going on here, and you might even learn a thing or two. So right, so just a heads up. So the first thing we're going to do on this channel, as always, is we're going to start with our basic technical analysis first, which I'm going to try and get through as quickly as possible, and then we're going to come to our Elliott wave analysis second. So we'll clear the chart. First thing we're going to do is a quick rundown of the chart in case you're new here. So we have 4 exponential moving averages on the chart: 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side with a yellow dashed line representing our point of control. This is a visible range, so when we adjust the chart, the volume profile adjusts. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 on the short term moving average, 20 on the long and a 9 to smooth. That's the rundown of the chart. Right, so let's get on with the basic technical analysis. Bullish. On the basic technical analysis, everything looks bullish. We have a huge bullish candle coming up right now as we speak, threatening to make a new all-time high. We came down to test the 10 exponential moving average and we bounced from it. We're still above the 20, still above the 60, still above the 250, miles away from our point of control. We've built up a little bit of thickness of trading here in the volume profile after this very thin zone here where we ran up so quickly on buyers. We're now actually starting to get some consolidation back and forth here, which we've seen with these 2 big red bars. So 4 weeks of correction here, still into a 3 weeks of correction into our 4th week of corrective activity here. Right, RSI is still overbought, having peaked a very high 98 on the weekly time frame. This is on the price scale at the moment, so peaking very high. Let's just switch into log for a minute so we can get a better look at, make the chart look a little bit more sensible. Alright, so this doesn't affect the technicals in terms of the RSI and the MACD, of course, so still burning a little hot at the moment, but we can stay overbought for a long time. We did it back in 2018, dipped in and out of overbought conditions for weeks on end as we rallied all the way up to 20 grand. So we could do that again, but we might come down lower. We're going to have to talk about that with the potential for a deeper correction. Excuse me. Right, MACD. Bullish as well. We've had these 3 little darker green bars showing a little cooling off of bullish momentum, little dip in the short-term moving average, long-term average still trending up, and we've just started to turn back up because of this big green candle here, and are now moving away from a longer-term average again with a nice bright green bar on the histogram, so also looking bullish. Day time frame. Let's have a look, see how things have cooled down on the daily. Now on the daily, we can see we're back above we dipped below the 10 and the 20 exponential moving averages, came down to the 60, didn't quite test it, come back up, had the bullish cross again of the 10 and the 20, now accelerating away short from the long as we head higher. Nice green bars on the MACD here after having a bullish cross of the short and long term moving averages, moving back into overbought territory above the 70, out of the neutral 40-60 zone on the RSI here as well. Looking strong, looking good. I mean, that's really all there is to say. Basic technical analysis on the daytime frame. So now we're going to dig into the meat and gravy of this video, which is all about the Elliott wave count. And you are going to have to bear with me and be patient with me here because we've got a lot of stuff we need to discuss. Okay, so the first things first. Long-term look since the low. Okay, back in March of last year where we were all the way down around 4 grand. So what have we done since then? So first pitchfork I want to bring up here is our long-term pitchfork. This is off the primary wave 1, 2, looking for our primary wave 3. We've peaked out at the 61.8 extension from the median line of this pitchfork. This doesn't necessarily mean it's a primary wave 3. Could be. Primary wave 3 could finish higher on the pitchfork. Right? We've got some evidence to suggest that we've put in a major pivot here at least for this, for a shorter term consolidation before again moving higher. I'm still bullish. I don't think this is a top, not a major top, just a minor top before we head higher. So what else have we got to support this? Well, if we take our trend extension tool, fib extension tool, and we place it on the bottom of the bear market in 2018, come to our primary 1 and primary 2 pivot, swing high, swing low pivot, we see that we come to the 1.618 to the tick right on the 618 from the median line here, 1618 extension of wave 1 from the 2 on the log scale. Now this happens to coincide perfectly with the 3618 on the price scale, on the arithmetic scale, right? So major confluence up here. This is why we've run into a high. Okay, and this is why we've stopped for the meantime. So just to be clear on that, that's what's going on that time frame. And we like to look at multiple time frames because it reassures us in our bias. And I have a bullish bias at the moment, and this all looks like we're still going up. We're still trending up. Okay. So then we're going to come down to the next time frame, which is our intermediate time frame using our 1-2 pivot here. All right. Now inside of here we can see that the 2 very shallow overall in comparison to this previous move up. But looking at the pivot and the following price action, we can see why. As we come out into the pitchfork to the outer bound, we then come back up to the median line and we find the 3 of the minor time frame bang on the median line, come back out to the outside bound on the 4, then we accelerate up and out of the whole thing to find our intermediate 3. So the third intermediate wave, the third wave of the third wave here, 3 of 3 in the primary scale, and we'll look what happens with our move. We come out of the pitchfork. Okay, now we can see, let's look at the momentum we get in that wave 3. Here's the RSI, here's the MACD, right? You look at it, look at this peak in the MACD here, look at this peak in the RSI. It's higher than this, and this is higher than everything. The 3 of the 3. That's where we want to see the peak of the momentum, guys. I may have mentioned that before when talking about technicals, but that's what I always find that reassuring. We get a break of the pitchfork combined with big top in RSI and a huge move in the MACD, right? That shows us breaking down now into this correction into a wave 4. I find that reassuring. So that's the intermediate time wave covered. So let's hide that pitchfork, and now let's move in to the next time frame. We're going to move into this correction now, so we're going to need to zoom in and have a closer look at what's going on. And there's a lot going on, because this could be over, it could not be over. I know that sounds pretty like, oh well, great, I could have guessed that. Yeah, well, alright, fair enough, go on, do trade however you like, and best of luck to you, I hope you win. But all we can do is look at the price as it is currently and try to draw some conclusions. So we're going to come down to the 1 hour and see what we can see here. So, have we done enough? Have we done enough to call this complete? In price terms, right, let me just find I'm looking for a fib retracement here. There's one I made earlier. Okay, yeah, here it is. So this here is in log scale, and we get a 23.6, which is this red line here. So we get a 23.6, and we bottom. We actually wick through it. Now on arithmetic, if we just come and have a look at that scale, this is the price, we see we get a 38.2, and we just wick it here as well. Okay, so 38.2 in price terms for me, this is of the intermediate wave 3 we're looking at. That's deep enough to call it a 4. Okay, so in price terms we've done enough. We could go deeper, 50, nope, nothing here really. Got this divot in the volume profile, got one just above the 61. Potential to come deeper, but 38.2, 23.6 is enough, but 38.2, I'm happy to call that deep enough for a 4. So that's a piece of evidence in favour of the correction having concluded, right? Next thing in favour of the correction having concluded, let's have a look. We have a 3-wave move in ABC, zigzag, ABC, zigzag, ABC, flat. Actually, sorry, another zigzag. 1, 2, 3, 4, 5, ABC. So W, X, Y. 3-wave move of 3 waves complete at a 38% retracement. Another piece of evidence, and it might be over. Let's look at another piece of evidence then. So we're just going to build up the case for the bullish case first, then we'll look at a more, well, not bearish, we'll look at a more long-term corrective case later. So, next piece of evidence I really like. Length of the W projected from the X. Right? Let's switch back into the log, because we want to work in log because price is silly. Okay, when you're coming up to 40 odd grand from 4 grand, you know, trying to look at things in price, it doesn't work. So you have to look at things in log scale to try and make any sense of these moves. But what we do find in log is we get a 1-to-1 parity. The Y matches the W. So the W projected from the X is equal. Absolutely equal, 100% extension. Also a nice reassuring thing to see. Right, so more evidence for the bullish case that the correction is over. I also like that. Okay, so the next thing we want to look at. We bottom, and then we've got to make something. We've got to make something of this move out of here, and this is where it gets ugly. I would love, as I'm sure you guys will as well. I mean, I don't want to buy it now. We're back near the top here, and this could be a simple 1, 2, 3 A, B, C move, right? If 5 waves in the C, potentially taking out this low and heading even lower. That could be a possibility. We could recount it to make it fit that possibility. So I don't want to be buying here at the highs. Okay, now I had orders on the 23.6 and just above the 38.2, and they're my orders, and I picked up and I'm now moving up. If I'm going to buy again, I want to wait for a retracement back into this correction, either from an impulse wave coming out of it, retracing into a 2, or finding the top and then waiting for the C, A, B, C, and trying to buy that pivot of the C. But I don't want to buy the top here. That's just me. You do what you want. There are breakout traders, there are retracement traders. Some people only feel comfortable once they're buying a breakout, and that's fine if that's what you want to do. But that's not what I want to do. Excuse me. So the issue I've got is picking out 5 waves out of here. Now, it would have been lovely. In a perfect world, we would have completed our 3-wave correction, and then we would have gone 1, 2, 3, 4, and off we go. Right, 5 waves. No overlap, no chicanery, 5, 3, 5, 3, 5 impulse. Off we go, laddie. Awesome. But 5th waves can be dickheads, pardon my language. They really can at times, because you've got the potential of having an ending diagonal in the 5th, right? And you've got the potential of having a leading diagonal in the 1 of the 5. And then when you, and remember, we're still building up the 3rd primary wave, so we'd be talking about the 5th wave of the 3rd primary wave. And of course, even higher up in the 5th of the 5th, you could have a ending diagonal overall with a leading in the 1 and an ending in the 5 of the ending of the 5, if you see what I mean. You can just end up with a mess that's very hard to pick your way through. So what I think we're looking at here is either a leading diagonal, and I'll show you how that looks, and it looks ugly, I warn you. It looks like that. We've yet to see the 5 come in because we're looking for parity in the 5 and the 3 here, because we want to get that that narrowing pattern where we get like a chubby kind of wave, and then a slightly less chubby sort of wave, and then we get a more extended wave, and then you end up basically drawing a line across the top of the 3 waves, you know, where you can say, here's a nice straight line to our 5, okay, and then here's a nice trend line up from the 2 to the 5, and we get a wedge pattern. I mean, we can see actually here, trading off the bottom of the proposed 4, here is where we're actually getting a 1, 2, 3 bunch of support here, but it's still primarily a wedge shape, and of course we still need to see this price develop. So 1, 2, 3, 4, 5 leading diagonal, ugly as hell, but it's there. Now how is it there? Well, we've got 1, 2, 3, 4, 5 in the 1, 4 overlapping the 1. There are 5 waves here in the 1. There are 5 waves in the 3 here, and there's a double zigzag, double combo here. 1, 2, 3, 1, 2, 3, 1, 2, 3 in the WXY 3, 4. But we get an overlap. So what we've got here is a leading diagonal inside of a leading diagonal, which makes it even messier. Then we get 3 waves here, nice and clean. 5 waves here nice and clean. So we're still following 5, 5 and 5, not like an ending diagonal where it'd be 3, 3, 3, 3, 3, 3, 5, 3, 5, 3, 5 we're talking about here, but with the overlap of the 4. So we've got that 5 waves, and then ABC 3 waves, and then we're working on 5 waves now. Okay, so 1, 2, 1, 2, 3, 4, blah blah blah, off we go, looking for this minor wave 1, 5th minute, 5th minuet, 5th minute, minor first. Okay, right, so that's the one way of looking at it. So what would reassure me here? Well, let's bring up some geometry again on the shortest time frame, which is here. 1, 2 pivot, swing high, swing low. I think this is a good exercise. I don't always use it because I'm not necessarily talking for a prolonged trend when I'm talking on my videos, but when I am talking for a prolonged trend, you'll often see me do this on every time frame. So we go primary pivots, intermediary pivots, minor pivots, so on and so forth, and we're doing that here as well. So swing high, swing low, come up to the top of the pitchfork for the 3, come back for the 4, 3 of the 5th touches the median line, so we've got you've got in that move up, we've got the high probability of making a median line of the 3, come back to a 61.8, bounce, 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 and then moving back up, looking to find that 5th. This pitchfork fits nicely. I'm happy to say this is more evidence to support that we're looking at this rather funky leading diagonal. What do you do? So if we do complete up here, we want to find parity, at least parity between the 3 and the 5. We could have a bigger 5, okay, and it could go even higher, but we want to look for 100%, which is around here. So I've actually set it up a little high, but if we look, that would actually take us to a new high. Okay, so we would breach the top, we would have a little breakout, and then you could potentially turn around immediately, because you've gone 1, 2, 3, 4, 5, and what have you done? 1, right? So then you got to go, I don't know why that turned off, bear with me. So all of this movement in this leading diagonal, you come up and you do a 1. You just break out, and this is why I'm not a breakout trader. You just break out and then boom, down we come to find that 2. Okay, and now you're sat in red when you should be waiting to buy the pivot down here and get going again. Right, so that's basically what I'm looking at with in a leading diagonal option. I'm not saying it's right, I'm just saying it's an option, and it supports the bullish case of the correction having completed. It does not mean we will not see another move down near a double top, because that could be wave 1 complete, wave 2 to come. So what we'll be looking at then. So let's just bring our picture. I'll tell you what, because we can get quite shallow retracements in the wave 2 of a leading diagonal, let's just leave that pitchfork up here for a minute, and let's bring up a fib retracement from the 1, and let's just say we get that 1-to-1 parity, which takes us out the top here. Okay, around here. Let's put it on the line, just to make sure that's the 1 you pillock. I'm looking for the 1, looking for the 3. Okay, so let's just come down, grab that 3. Here's the 100. It's just above the high. So let's now that we know that, let's now get our fib. Oh no, I've done it the wrong way around. Excuse me, being stupid here. Right, so let's just try that again, guys. Okay, so there's the 1. So what we want to do is actually move our that's our extension to here, so we want to take away our fib retracement, okay, and then we want to match our fib retracement to that proposed. This is all theoretical until it actually gets there, guys, okay. It's just talking entertaining bollocks until it actually gets there and does this and breaches this high and finds this 100%. But if it does, then what have we got? Retracement terms. Okay, so let's remove our fib extension. Well, we've got 23.6, which would come down and test the top of the 3 right here. That would be a shallow 2, wouldn't it? So, bump, shallow 2. Look where we got here is confluence. Edge of the pitchfork, 23.6, top of the 3. 1, 2, buy here, off we go. Off into a wave 3, off into God knows where. Then we'd have to set up our minor time frame pivots, with another pitchfork as we move out of the minute into the minor. So you could come deeper though. There's nothing telling you have to maintain the structure of the previous pivot. You don't have to. You can break this, make a deeper pivot, and then move higher, right? So what would you be looking for there? Or you'd be looking for move down anywhere to 20. We talked about 23.6, which is the top of this free here inside of this pitchfork, but you could come down to the 38.2, outer bound of the pitchfork, bit of volume here, into the previous wave 4, right? And then you could come all the way to the 50, into all this volume, all the way to the 61, into here. Now, at that point, you might as well be talking about a flat correction and be saying A to here, B to here, C to here, because it's so deep at that point that the fact that you're in a diagonal doesn't really matter. I'd be surprised if this leading diagonal pattern was correct. I'd be surprised to see it come down this far. Okay, so there you go. There's your pivots. You could put an order on the 23.6. You could. I mean, it's just what you want to do. It's not up to you. It's not up to me. This is not financial advice or trading advice. I've already brought this pivot here. I personally am happy from where I am. I would be greedy because I'm already in the trade and probably aim for a little bit lower, to be honest. I'd be looking for that I'd be looking for that 3-wave move down in a 2. You want to see that 5-wave move complete, and then you want to see a zigzag or whatever, a flat pattern. You want to see 5-3-5 or 3-3-5, right? So that's one option. Leading diagonal, we want to see it come up here, break this high, 1-to-1 parity with the 3, and we want to see 5 waves complete, and we want to see it pivot. That for me would give me confidence that we're in a leading diagonal. If it pushes higher, then so be it. I'm going to actually get more confident if it pushes higher. Okay, so that's one, and we're just going to hide that we'll hide the wave for the moment. Put the pitchfork away. I think we've covered the bullish case now. Like I said, I gave you that waffle warning for a reason. Alright then, so let's look at the bearish case. The bearish case is not bearish case, but a longer correction. Let's just remove this minor time frame because it's confusing me. Right, so simply, he says, simply we've gone like this. Either A or W, either B or X, and then either C or Y, and then we get moving. That is literally as simple as it gets. If we're in the flat, then this would be 3, right? 1, 2, 3, 1, 2, 3, and then this would have to be a 3, 1, 2, 3, 1, 2, 3, 1, 2, 3 with the AB here. So this would have to be WXY. Oh no, it could be ABC, 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 and then 5 in the C. So you could go A, B, tricky to get 5 here, but you could go WXY, ABC, then 5 waves down, okay, or 3 waves down into a big WXY. Either way, you'd be looking at a double top or somewhere near it. You could extend beyond it if we're looking at a bigger flat pattern, but the whole point is you'd be looking at a 3-wave move to complete. So let's just have a look at, let's assume we get parity here with the top, and then because obviously we've got the leading diagonal waiting up here anyway. So 61.8% extension of the A, if we're talking about a 3-3 and this turns out to be 5 waves, if we're talking about a 3-3-5 flat pattern, regular flat, and we top out near the highs, or wherever we pivot, right, because we don't know yet. If we see a big pivot now and we start the breakdown, we can move it to here and say, right, this is our pivot, and then we can start looking for 5 waves down in a C. Okay, so what we'd be looking at, 61.8% extension of the A in this divot here between these two big volume nodes, or you could simply run all the way down to 100% like that and have a nice 1-to-1 parity, perhaps finishing a little lower. If you top out sooner before this high, you're going to finish a little lower with 1-to-1 parity, aren't you? So maybe 123.6 is down here amongst this volume. You've still got to remember those long-term fib targets we talked about off of the intermediate wave 3. So let's just have a quick reminder. Bear with me. And let's just switch out a log for a moment. The 50's waiting down here for you. right here. This is parity roughly with where we've taken this pivot, is the 123.6 and also the 50% retracement of wave 3. So you could be looking after all of this at a nice simple flat pattern, and the correction continues for longer. Okay, and we've got another month or two, well, another, no, not even a month, another couple of weeks, right? And you come down and you buy this pivot at a 50. So I'm going to go. I think I've already got one in for the leading diagonal idea, but I'm definitely gonna put an order in down here. Like obviously not. I'm not gonna just run in and do it now. I'm gonna wait to see this pivot, okay, wherever it emerges, and then I'm gonna say, right, now we're heading down. We've got a trend coming down the 5 waves. Is it an ABC 535? And then I can start getting greedy and say, all right, let's target the previous low, or let's target this 50. We can come out in a big flat pattern. I mean, this is a dream, really. This is to get here to pick up Bitcoin for 26k when it was trading at 42. Come on, guys, that's crazy good, isn't it? So yeah, I get that some of you guys might be in a hurry. I get that you might want this to be the leading diagonal and you want to get that little retracement. You want to wait for that pivot, get a little retracement, buy the 2, get moving. But what if this is a big flat pattern, right? You shouldn't be upset about that. You should be chomping at the bit for it. Gimme, 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 gimme. Deeper retracement. And then what more could you ask for? We already know with the three-wave structure here and the structure here, we haven't just broken down. Alright, so we're looking at a flat pattern. We've gone over all the confluence, all the fib targets, all the channeling, all of the pitchforks, everything to convince us that we're up here in the intermediate 3. Right, even if we're not, and we are in that primary 3, who gives a shit? It's a flat pattern into a 4. If you get it, buy it. Alright, so, I mean, once again, read the disclaimer. I'm talking about me. I'm not talking about you. You do what you want. Alright guys, so that's it. I'm sorry that there's been so much waffling in this video. I really am. I know I've gone on and on, but this is a complicated situation at the moment. We're in a 4, but it could be a flat. It could be already done. Keep an eye on it, really, at the end of the day. And if you're new to the channel and you like what you're seeing here, please subscribe, smash the like, let us know what you think in the comment section below. And all the best. I will be back with you as soon as I can with another video, but I am very busy as always. And take care, everybody. Speak to you soon.